Hello and welcome to the look ahead for Wednesday, the 5th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So just to kick off, overnight we'll be watching out for a speech from Bank of Japan Governor Ueda. In the European session, we've got European Services PMI, Composite PMI, as well as PPI inflation. UK Services PMI, as well as the Bank of England MPC hearing before the Treasury Select Committee. And then in the US session, ADP payrolls, ISM Services PMIs, and also Trump is due to speak tomorrow. Now, obviously, Trump's comments will be watched very closely. He has a knack of moving the financial markets lately. If we just think about what's going on today, we've seen the tariffs applied, 25% trade tariffs applied to China and Mexico, as well as 10% trade tariffs applied to China in addition to the previous 10%. So that's a total of 20% now. And that has come at a time where we've also seen sort of growing concerns over the outlook for the US economy. So I'm just going to bring up here, this is the US dollar, Japanese yen market. Basically what we'll be watching out for tomorrow, obviously, is the continuing fallout from today's announcement, which has hit the financial markets hard. We've seen a sell-off in US stocks, we've seen a sell-off in the US dollar, we've seen sliding treasury yields, but we've also seen a sell-off in European stocks, Chinese stocks. It's been global, and that is due to the concerns over what this means for global supply chains, what it means for global growth. We know that US data already was forward, particularly forward-looking US data was already raising concerns about declining consumer confidence, declining business confidence, as investors, as businesses and households waited for trade tariff news. Now that news has come out. There'll be more news expected on the 4th of April with regards to reciprocal tariffs. Now, that may hit Europe harder, but more on that in a little bit. So this, as I said, US dollar, Japanese yen. We'll be watching out for US data tomorrow. We have the US ISM Services PMI, which is expected to just tick modestly higher to 52.9, up from 52.8. However, this has fallen significantly, well, considerably from the 54 level that it was previously, as we start to see some of that slowdown appear in the more timely data. ADP payrolls are also coming in tomorrow. These are obviously ahead of Friday's non-farm payrolls, expecting to see 140,000 jobs added, down from 183 last month. Now, if we get weaker than expected data, obviously, as I said, there are already some concerns that trade tariffs are going to negatively impact the US economy. They're going to potentially cause a downturn in the economy. We've seen the market already ramp up expectations for Federal Reserve rate cuts. Prior to the announcement, the Fed was, the market was pricing in 225 basis point rate cuts this year from the Federal Reserve. That's now increased to 3. Now, this comes at a time when the Bank of Japan is considering hiking interest rates further. So we've already seen the Bank of Japan hike interest rates a couple of times since moving out of its negative, bringing the interest rate out of negative territory. And that means that we could, obviously, this expectations of potential further rate hikes from the Bank of Japan is offering some support to the Japanese yen. Yen is also finding a little bit of support from the safe haven demand, given the uncertainties and the concerns over global economic outlook and the US economic outlook. As a result, we've seen the Japanese yen has actually strengthened around 4% since the beginning of, well, 8th of January. It's trading in a falling channel. It's broken below the 200 SMA and also the 50 SMA. We can see it's just testing sort of this level here, which is the low that we saw in December. Looks like it's trying to break below there. That's around the 148.80 level. If we get a break below that, it's going to open the door to around this 145 level. Not only is that the round number, but it's also around the area of the 23.6% Fibonacci retracement from the 162 higher than 139.50 low. So just watch out there. If we might get hawkish commentary from Ueda, that's going to give the yen some strength, and particularly this pair will come under pressure. If we also get any sense of weaker than expected data, it's just going to fuel those concerns over the US economy. As I said, Trump is also going to be speaking. If he happens to add to the more downbeat outlook for the US economy, then watch out for further downside in this pair. On the upside, any slightly more dovish Ueda and upbeat US numbers, you may see the 150.78 level, which is the 50% Fibonacci retracement being tested. Wasn't really able to break above that level earlier this month. Above there, you've got the 200 SMA at 152.30 coming into play. So just sticking with USD crosses, we've got the UK PMI data. It is the services PMI data, composite PMI data. It's second readings. It doesn't tend to be as market moving. I think that perhaps more of the focus will probably be on the MPC hearing before the Treasury Select Committee. This is where the Bank of England Governor Andrew Bailey will be giving more clues potentially about the outlook for UK inflation and interest rates outlook for the Bank of England. So the Bank of England is expected to cut interest rates on several more occasions, despite the fact that we saw inflation tick higher to 3%, which was a 10-month high in January. Inflation is expected to continue climbing to a peak of 3.7% in Q3 this year. But even so, Bank of England policymakers have insisted that they see the potential for more rate cuts to come. But this is the pound US dollar. We've seen a really lovely recovery from that 13 January low of 121 as the price looks to recover towards the 200 SMA. This is a story of US dollar weakness as we see the differences between the expectations surrounding the BOE and the Federal Reserve close in, and as that sort of story of US exceptionalism deteriorates after these Trump trade tariffs, it's been suggested that the pound could actually be a beneficiary or benefactor of trade tariffs if we see them applied to Europe and other countries in reciprocal, because the UK has this very small trade deficit with the US. It's unlikely to be hit by tariffs, which means it could benefit compared to some of its other G10 peers. But just levels to be watching out for, depending on how we hear from the Bank of England tomorrow. I mean, if we do hear a slightly more dovish tone, then that could provide a little bit of resistance to the upside. But I think US dollar weakness might be a bigger story. Watch out for the 128 on the 200 SMA. That's going to be the next target on the upside. On the downside, I mean, you've got the immediate support there. That's the low that we saw back in August. That's around the 126.70 level. And then below here, we've got the 125 as a level to watch. We've also got the 100 SMA in there. Another area just to really keep an eye on is what's going on in Europe. Obviously, we've had some huge volatility in European stocks just over the past couple of days. We had that jump higher to record highs on news of increased defense spending because of everything that's going on between Russia and Ukraine, and the increased spending on defense by European leaders. And then today we've seen this massive fall off as the market reacts to potential trade tariffs coming for Europe. Because they've been applied to Mexico and Canada, it does raise the likelihood of similar tariffs being applied to European stocks. Now in the DAX, we've got those car makers like Porsche, Stellantis, and also BMW that are being hard hit on concerns of trade tariffs. Look, this, I mean, we've seen a come down from the all-time high. As far as Eurozone data is concerned, tomorrow we've got the PPI, inflation, and also the PMI figures, services PMIs. Again, these are secondary readings. It would take a very big upward revision to inject optimism in this market right now, but just levels to be watching. This is a very, very strong bearish engulfing candle. It's testing that rising trend line that we've seen that dates back to August last year. Now, if we get a break below this level, watch out for tomorrow, because obviously we've gone into the close already today. But on the downside, the next level to be watching for is the 22,000. If we get a break below that, that's going to create a lower low. It'll be really interesting to see whether this trend line does hold up. If we see any sort of recovery in the DAX tomorrow, that will just sort of really strengthen what that support line means. But the fundamental factors seem to be stacking up against the DAX right now. For the time being, the uptrend is still intact. As I said, we need a move below the 22,180 to create a lower low. That brings 21,500 into play. On the upside, all-time high was there at 23,300. So look for a rise above 23,000 in order to access that 23,300. As we're looking at the DAX, also just going to take a very quick look at the euro, because what's been interesting here is whilst we've seen the equity market really respond to threats or worries over trade tariffs in Europe, the euro hasn't been suffering in the same way. In fact, the euro has been benefiting from the sell-off in the US dollar, and that's helped it recover briefly above that 105. 30 level. We're back below it now. It's just testing the 100 SMA on the upside, but we do need to have a close above that level in order to be able to create a higher move up to the 106. Obviously, if we've got some stronger than expected data, then that could help the euro move higher, and any US dollar weakness will pull it to the downside. Just as far as support levels concerned, immediately on the downside 104.50, and then you've got the 50 SMA net at 104. Just finally, we'll have a look at what's going on in the US stock market, because as I mentioned, these tariffs have really dented optimism regarding the outlook for the US economy. We've seen a real sharp sell-off, breaking below the 200 SMA there at 20,300. On the downside, we can see that the price remains below that 200 SMA. If we get a close below that 200 SMA and we get slightly weak data tomorrow, then I think then we could be looking for a retest. We could be looking for a test of this level down here, 19,920. Below there, 19,600. That was the low that we saw from October, comes into play. If we manage to get a close above the 200 SMA and encouraging data tomorrow, on the upside, look for a rise towards the 20,750. So that is everything from me today. I hope you found it useful. If you have, then please do give this video a like, and I will see you tomorrow.